If I told you that right now as we speak, crypto whales are secretly buying up 45,000 Bitcoin while everyone else panics, would you believe me? What if I also told you this crash isn't random but follows a pattern that's happened every single time in crypto history? Welcome to Generational Wealth, your pathway from knowledge to legacy. As of November 18th, 2025, the crypto market is in full meltdown mode. Bitcoin has plunged below $91,000. That's over 28% down from its all-time high of $126,000 just last month. Ethereum, Solana, and pretty much every altcoin are bleeding out, with the total market cap shedding over $1,200 billion since early October. Everyone's asking, why now? Is this the end of the bull run? Or a brutal but healthy correction? Today, I'm breaking down the 5 hidden reasons behind this crash that mainstream media isn't talking about enough. And at the end, we'll look at on-chain data to answer. Are the whales quietly accumulating? Stick around, this could be the dip of a lifetime. Hit that like button if you're holding through this, and let's dive in. Hidden reason number 1, insane profit-taking after the massive 2025 rally. 2025 kicked off with Bitcoin around $69,000 to $70,000. Exploded past $100,000 on Trump pro-crypto momentum and ETF inflows, and peaked at $126,000 in October. That's over 80% gains in 10 months. Long-term holders and early 2025 buyers are now locking in life-changing profits. On-chain data shows heavy distribution from old wallets. This is smart money ringing the register after the parabolic run-up, not panic selling. Classic cycle. Euphoria gives distribution, gives price correction. Reason number 2. Spot ETFs flipped from massive inflows to heavy outflows. For most of 2025, ETFs were vacuuming up billions every week, the main fuel for the rally. But November has seen multi-week net outflows totaling over $2 billion as institutions rotate to cash amid macro uncertainty and take profits. When Wall Street stops buying and starts selling, retail gets rinsed. Crypto is now fully correlated with TradFi, and TradFi just hit the risk-off button. Reason number 3. Fed rate cut hopes crushed plus macro uncertainty. Everyone expected multiple cuts with the new administration, but sticky inflation fears, tariff talks, and hawkish Fed minutes slashed December cut odds to about 40%. Higher for longer rates murder risk assets. Throw in low liquidity moves and the fear and greed index plunging to 11 extreme fear, the lowest since 2022, and you get cascade selling. Reason number 4. Leverage wipeout and liquidation cascade. Perpetual futures open interest was near all-time highs heading into November. When BTC cracked $100,000, it triggered $19 to $20 billion in long liquidations across exchanges in just weeks. A full-blown death spiral that forced selling and snowballed lower. Over-leveraged 50 to 100 times degens got wrecked exactly like always. And the 5th hidden reason, lingering trust issues plus new systemic fears. 3 years after FTX and other blow-ups, big money is still scarred. Add recent DeFi exploits, stablecoin jitters, and broader risk-off rotation in global markets. And institutions hit the eject button fast. Now, the big question, are whales accumulating this dip? Yes, and big time. On-chain data from CryptoQuant, Glassnode, and others shows whales 1,000 plus BTC wallets. Scooped up over 45,000 BTC in the past week alone, the second biggest weekly accumulation of 2025. Only behind March, the number of addresses holding 1,000 to 10,000 BTC just hit a new local high while price crashed. Whales are aggressively buying the fear while retail capitulates. Historically, this exact pattern has marked major bottoms. So is this the end of the bull market? I still say no. It's a violent mid-cycle shakeout that's happened in every single cycle. Whales are voting with their billions that this dip is a generational buying opportunity. What do you think? Final capitulation or load the boat dip? Comment below. Smash like if you're stacking right now, subscribe and hit notifications, daily updates coming all week. For trending topics and actionable crypto insights, join our Insiders Club on our website at generationalwealth.biz. For the rest of the year, we're offering new members access for only $3 per month. It's less than the price of a cup of coffee for a month's worth of insider knowledge. Stay strong and invest smart. Thank you for watching. We appreciate you. See you in the next one. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.